Hello everyone, and thank you for tuning into the North Main Minute. I'm Joshua Doby. Financial planning item with which we're working literally every single day here at North Main Financial Group has to do with the broad idea of investing and how to invest or what is appropriate for me to invest. Now, it can happen, especially if there's been a hot market, that there is, let's call it, increased interest in investing. We're happen to be seeing that right now, and sometimes when things are not going as well, that tends to get a little bit quieter. But when we're looking at the investing universe, what is appropriate for you? Meaning, should you invest? One. If you should invest, then how? And all of the corollary kinds of decision tree sorts of decisions that need to be made from that point. I'm going to start out with some pretty bland stuff, and I know it's not going to be very specific, but it's not true that everybody should invest. It's not. I know that sounds a little bit weird for the investment guy to say here, but it's absolutely true. There are times to invest and there are times not to invest. If you're working paycheck to paycheck right now, paying bills, I'll tell you up front that it's probably not a wise idea for you to invest right now. We would start with some things like make sure you have an emergency fund, or make sure that you have some cash set aside in a savings account or a money market account, so that when things come up unexpectedly, you have that financial flexibility to be able to address them. Second big thing that you keep in mind whenever it comes to the investing universe, if it is appropriate for you to be investing at this time, how should you? I'm going to give you a terrible answer to start. It's different for everybody. Depends on where you are in your life, depends upon the kind of goals that you have in mind. It depends on what kind of time frame that you have in order to get there. And I say that not to be overly simplistic about it, but it's very, very important that you understand what kind of target you're wanting to hit when you go into invest. Let me say it a different way, because we get this all the time. Just because your buddy is investing in stock ABC or investment XYZ on this end of things does not make it applicable or appropriate for you. And this gets really hard when we're talking about investments which probably have done very well recently. I'm not even going to name some of them because you probably know what they are. But it becomes very, very difficult to have those conversations because folks say, well, it's been going this way, so linear thought, we do it all the time. It's going to continue to go way up from there. And that may be true for a while. And then it may not be true. And do you know when that time is going to be? So you want to make sure that you identify your goals in the ways which are most appropriate for you. Yes, I have some biases. I think it's wise if you're not doing this kind of thing full time. I think it's wise to get the advice of a planner that you trust and an investment manager that you trust in order to be able to navigate those kinds of waters. But you may be one who does it on your own as well, which is entirely okay and appropriate also if you're giving it the time and the energy that it needs and deserves. Third big thing, when it comes to the overall investing universe, make sure, as if you are one who is investing, make sure that you address what you own and any changes to those investments, especially in light of macroeconomic or macro environment kinds of things as they shift over time. And I'm not talking about day trading where things change in a minute or a second kinds of things, but there are different things now than there were, say, 10, 15, 20 years ago. And it may be true, or it may not be true, that those same philosophies that you had a decade ago would be applicable today. And if you don't believe me, let me just toss out a couple of things which may be very apparent to you. But 20 years ago, we did not have Apple iPhones. I know, shock to those of you who are a little bit younger. But we didn't have smartphones of any kind. We barely had these things that flipped up and had orange digits on them. That was about it that we had at that time. Now we have just an entirely different universe, not only of electronics, but also publicly traded companies that are associated with them. We get notes about AI all the time right now. Nobody I've really found can really define what AI is at this point or what the impacts are going to be, but that may be the next big wave. Not saying that those companies are good investments, because all you have to do is look back about 25 years and look at every single .com and technology company which is now completely bankrupt and out of business to know that not every company is going to survive or be a good investment. But it is the kind of thing that is appropriate to watch and to see, is that something that we should keep in mind or not? And that's why I'm saying you want to make sure when you're making your investment decisions that you're constantly reviewing them and making sure that they continue to align with your goals. So just because you did something a while ago may or may not mean that it's appropriate for consideration today. Constant monitoring, constant review of your plan to make sure that it's appropriate for your space. If you'd like to reach out to us at North Main Financial Group, Talk about where things are for you from an investment portfolio standpoint if you are an investor. If you're not an investor, you want to chat about whether it is appropriate for you to be an investor or not. It may not be at this time, and that's entirely okay as well. But do you have a plan for what happens next? We'd love to hear from you. NorthMainFinancial.com.